Exercise 1.7. You are provided with the information relating to Bottoms Limited for the financial year ending 28 February 2025. Required. Complete the statement of comprehensive income or income statement for the year ending 28 February 2025. Show calculations in brackets. Information 1. The following balances and totals are provided on 28 February 2025. Vehicles at cost price 440,000, accumulated depreciation on vehicles 132,000, equipment 380,000, accumulated depreciation on equipment 325,000, trading inventory 800,000, debtors control 261,150, provision for bad debts 11,000, loan Spark Bank 225,000, SARS LBS 22,400, pension fund 7,900, revenue 2,885,000, cost of sales 1,600,000, debtors allowances 35,000, salaries and wages 410,000, directors fees 413,500, auditing fees 44,000, employer contribution 40,500, bank charges 14,000, sundry expenses 31,491, bad debts 6,050, rental income 117,475, interest on fixed deposits 13,500, repairs and maintenance 62,800, consumables 19,750. Number 2. Adjustments and additional information. 2.1. A debtor returned damaged goods with a cost price from 10,000 Rand. A profit margin of 50% is maintained by the entity. No entries have been made. 2.2. A debtor has been declared insolvent. His estate has paid 30 cents to the Rand. 300 Rand has already been received and recorded. Write off the rest as irrecoverable. 2.3. On 28 February 2025, the company receives 1,000 Rand from a debtor whose account was previously written off as irrecoverable. However, the amount has been incorrectly included in the debtors control column of the cash receipts journal. 2.4. The provision for bad debts must be adjusted to 4% of the outstanding debtors on 28 February 2025. 2.5. During February, inventory was damaged in a fire. The insurers informed Bottoms Limited they had transferred 24,750 Rand into the entity's bank account with regards to the insurance claim. The insurers only cover 75% of any damaged inventory. No entries have been made for the damaged inventory or the insurance claim. 2.6. A physical inventory count on 28 February 2025 indicates the following. Trading inventory on hand, 765,500 Rand. Consumables used, 19,500 Rand. 2.7. Depreciation is calculated as follows. Vehicles are calculated at 20% per year on the reducing balance method. Take note that a new vehicle was bought on 31 December 2024 for 150,000 Rand and it was correctly recorded. Equipment is calculated at 15% per year on the cost price. This equipment is very old and will have to be replaced soon. 2.8. An additional fee of 6,000 Rand is still owed to the auditors. 2.9. An employee who resigned at the end of January is still included in the salary journal for February. Her information is as follows. Deductions, pay as you earn, 2,880 Rand. Pension, 1,950 Rand. Employee's contribution, pension, 3,900. Net salary, 10,538 Rand. Point 10. The rent has been received for 3 months in advance. The monthly rent increased on 1 November 2024 with 625 Rand. 2.11. The loan statement received from FNB Bank shows the following. Balance at the start of the financial year, 474,000 Rand. Repayments excluding interest, 211,500. Interest capped loss to be calculated. Balance at the end of the year, 300,000 Rand. 2.12. Income tax for the year amounts to 48,600 Rand. To be able to complete this exercise, we first need to do a couple of calculations. The first calculation will be the provision for bad debts. If we read the information 1, we start with an opening balance for debtors control of 261,150 Rand. We will then go to adjustment 2.1, where a debtor returned damaged goods with a cost price of 10,000 Rand. A profit margin of 50% is maintained. So we need to subtract the amount that was returned. So we take the 10,000 cost price times 150 divided by 100 to get 15,000 Rand. So subtract 15,000 Rand that must not form part of the debtors control account. Adjustment 2.2, a debtor has been declared insolvent. His estate has paid 30 cents to the Rand. 300 Rand has already been received and recorded. The other 70 cents needs to be written off as irrecoverable. Therefore, 700 Rand will have to be subtracted from the debtors control amount. In adjustment 2.3, the company received 1,000 Rand from a debtor whose debt has previously been written off as irrecoverable. The amount has been incorrectly included in the debtors control column of the cash receipts journal. So 1,000 Rand needs to be added back to the debtors control amount. So to calculate the correct debtors control amount, we will then have to do the following calculation. We will take 261,150 Rand, we'll minus the 15,000 Rand of the debtors damaged goods that was returned, 700 Rand of the amount that was irrecoverable, and 1,000 Rand needs to be added back to the debtors control amount that was received from a debtor that was previously written off as irrecoverable. So our new debtors control amount will be 246,450 Rand. The provision for bad debts must be adjusted to 4% of the outstanding debtors on 28 February 2025. So to calculate the provision for bad debts, we are going to take the new debtors control amount of 246,450 Rand. We're going to multiply that by 4%, and that will then equal 9,858 Rand. The balance for provision for bad debts that goes to your income statement is thus then 11,000 Rand minus 9,858 Rand to give you an answer of 1,142 Rand decrease. For calculation 2.6, we need to calculate the inventory sortage. We go to information 1. According to our records, our inventory is 800,000 Rand. Adjustment 2.1. A debtor returned damaged goods with a cost price of 10,000 Rand needs to be added. And then according to adjustment 2.5, inventory was damaged. The insurance company only paid 75%. So the 100% value we need to calculate. So we take the 24,750 Rand and we divide by 75% to get an answer of 33,000 Rand. And that would be the damaged stock that was lost due to fire that needs to be subtracted from our inventory. So the inventory, according to our records, should then be 777,000 Rand. According to the physical stock take, the inventory amounts to 765,500 Rand. Thus, we take the 777,000, we minus our amount from our physical stock take, and we have a deficit of 11,500 Rand as our trading stock deficit. Depreciation on vehicles. We first start with our vehicles that remained unchanged. So we take our cost price of 290,000 Rand, we minus the accumulated depreciation of 132,000 Rand, and we times it by 20% for the whole year to give you 31,600. New vehicle was purchased on the 31st of December 2024 for 150,000 Rand. So depreciation on the new vehicle will be the cost price of 150,000 Rand. We times that by 20% and we had the vehicle for 2 months. And this will give us an amount of 5,000 Rand. Depreciation on equipment, the 1 Rand clause is applicable. We will take our cost price of 380,000 Rand. We will minus the accumulated depreciation of 325,000 Rand. We minus 1 Rand, and then we'll get an answer of 54,999. For adjustment 2.10, let the rental income equal X. Rental income has been received in advance for 3 months. Rent increased on 1 November 2024 with 625 Rand. Therefore, the new rental amount will be X plus 625 Rand, and that period will be for 7 months. So we create an equation, 8 months normal, 7 months with the increased amount to equal 117,475 Rand. That was the rental income from information 1. The amount received in advance needs to be subtracted from the rent income. So we're going to take the 7,540 Rand, which is our X. We're going to add 625 Rand because that was the increased amount. We multiply that for 3 months, which was received in advance. So 24,495 Rand needs to be subtracted from our rental income. To complete the statement of comprehensive income of Bottoms Limited for the year ending 28 February 2025, we are going to start with our revenue of 2,885,000 Rand. We are going to minus 35,000 and minus 15,000. And that will give us a new revenue of 2,835,000 Rand. The 35,000 is your debtors' allowances, and the 15,000 was the damaged goods that was returned from adjustment 2.1. Cost of sales will be 1.6 million, and then we're going to minus the 10,000 Rand cost price. That was the amount that was returned by debtor for damaged goods. and then that will give us a total of 1,590,000 rand. So our gross profit will then be 1,245,000 rand. To calculate the other operating income, we will start with our rental income. We start with our balance of 11,17,475, and then we are going to minus the 24,495 rand that we calculated from adjustment 2.10. That then gives us a brand new total for rent income of 92,980 rand. We are also going to include the bad debts recovered of 1,000. We also consider the provision for bad debts adjustment, and that was 1,142 rand. So our total other operating income is 95,122 rand. If we add that to our gross profit, we get a gross operating income of 1,340,122 rand. To calculate the operating expenses, we are going to start with salaries and wages. Information 1 states the amount paid was 410,000, but then we obviously need to consider adjustment 2.9. If we go to adjustment 2.9, an employee who resigned at the end of January is still included in the salary journal for February. Her information is as follows. So we will need to deduct her pay-as-you-earn, her pension, and her net salary. The net salary is 10,538 rand, 2,880 is pay-as-you-earn, and 1,950 is her pension deduction. The new salaries and wages amount will then be 394,632 rand. Directors' fees, an additional remained unchanged, and audit fees, according to adjustment 2.8, an additional 6,000 rand is still owing. So we need to add 6,000 rand to audit fees to give us a new total of 50,000 rand. Employer contribution, we start with 40,500 rand, and according to adjustment 2.9, we need to subtract 3,900 rand. That was deducted towards pension to give us a new subtotal of 36,600 rand. Bank charges remained unchanged. Sundry expenses remained unchanged. Increase the bad debts with 700 rand to give us a new total of 6,750. Repairs and maintenance remained unchanged, and consumables was given as 19,500 rand. Depreciation will be according to adjustment 2.7. Your depreciation for vehicles was 31,600 plus 5,000. Now depreciation on equipment was 54,999. And that will then give us a total of 91,599 rand. Our trading inventory deficits, according to adjustment 2.6, will be 11,500. We got that by doing the calculation in 2.6 to get an answer of 11,500. And then our loss due to fire would be the 24,750 times 25 divided by 75 to give you an answer of 8,250. The operating profit amounts to 199,500. Our interest income is given, and the profit before interest expense will then be 213,000. So if you take your operating profits and you add your interest income, you will get your profit before interest expense is 213,000 Rand. Your interest expense, you go to adjustment 2.11, where we start with our opening balance of 474,000. We minus the repayments excluding interest, and we minus the closing balance at the end of the year. That gives us a total of 37,500 Rand that we subtract. The net profit before tax will then be 175,500. That would be 213,000 minus your interest expense of 37,500 to give you a net profit before tax of 175,500 Rand. Our income tax for the year, according to adjustment 2.12 that was given, is 48,600, which we subtract from our net profit before tax to give a net profit after tax of 126,900 Rand. And that is how you would complete this exercise.